Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw another pretty ugly day on Wall Street. An attempt at an afternoon comeback crumbled into the close, Ken, but we have some stocks that are trying to buck the weakness.
Yes, we do, Ali. Let's take a look at Fair Isaac. People might recognize this ticker symbol, FICO, FICO. They do the FICO store. So Fair Isaac. Also Borg, Warner, BWA, and finally Valvoline, which just announced a big sale of its global products division. So I think it has the N going for it in CanSlim. Interesting company. VVV, triple V is the symbol for Valvoline.
Yeah, some fresh watch list ideas coming at you soon. But first, let's analyze the major indexes. The NASDAQ today down 1%, taking the hardest hit, followed by the Russell 2000, 0.9% down today. We also had the S&P 500 and Dow down roughly 0.75% apiece. And this comes after that pretty ugly downside reversal that we saw on Wednesday. So this is not what we want to see, although it's not all too unexpected with all of the major indexes running up how they had been running up for most of 2023 as the year kicked off, coming right up to some pretty notable resistance levels. So while it's not surprising to see what we're seeing, Ken, that doesn't make it fun.
Yeah, I mean, just the nature of yesterday's pullback too was a bit disappointing. I mean, after 7 up days in a row for the Nasdaq, of course, you expect a little bit of consolidation. But the question is, can we get that consolidation in orderly price action? Does it come in lower volume? Is it characterized by a volatile price swing? So the nature of yesterday's pullback was a bit disconcerting. It was a big outside day. It was a close near lows. Volume rose. Just a reminder that there are still sellers out there, and that indexes, not only the Nasdaq but the other 2 major stock indexes as well, are facing some pretty serious overhead supply issues. And look like today we were rallying off lows, and indexes were making a nice stand. And then I don't know if you have the intraday chart.
Right.
For the Nasdaq, there was some selling that picked up the pace during the final half hour of trading. So not a great close. It looks like we got. I didn't check volume up to the minute, but at one point volume was tracking below what we saw on Wednesday. So we'll have to see how that finally settles out. So if we can avoid a distribution day, that would be good. But not such a great day Wednesday, and we were looking like a decent close today, but we faded late.
Yeah, and so the NASDAQ right around that 50-day line, trying to hold above the 21-day line, back below that round number at 11,000. For the S&P 500, a couple of resistance levels we've really been harping on. You've got the 200-day. You also have that round number at 4,000. On a weekly chart, we can also see this brick wall here of a declining tops trend line from those all-time highs. We are seeing the 10-week and the 40-week line converging in a positive way, but this week we're seeing those losses here. Can the S&P hold around all of these converging shorter term moving averages? I guess is the next question here, Ken.
Yeah, well, yesterday when the S&P plunged, you can see all those moving averages converged right together. It got resistance at the 4,000 level. That's right where the 200-day line is, and then you've got your 50-day, your 10-day, your 21-day, all kind of together. So the S&P 500 wasn't able to hold that today. The Nasdaq, even though it was a weak close for the Nasdaq, looked like it was able to close above these short-term support levels. So that's a small victory for the tech index. But yeah, kind of disappointing to see the sellers late in the session. Would have felt better about this confirmed uptrend if maybe we were able to rally off lows and at least close in the middle or upper half of the range. We could be near the middle of the range today, but just a reminder that it's still a very challenging environment. And bond yields were lower, or actually rose a little bit today, but just so many worries about the earnings season and what this recession is going to look like. I think institutional investors just don't have a good handle on things, so it's not surprising that they've been probably a little hesitant to put money to work in stocks here.
That's exactly right. Just a quick look at the Dow and the Russell 2000 as well. We've been keeping an eye on this 34,000 level for the Dow, a sharp decline yesterday, putting it below those moving averages. Now it's approaching its lows from late last year, beginning of this year. IWM also some pretty strong resistance right at its highs from November and December. Now coming back down to the 200-day. It had been one of the leading indexes, or at least outpacing what we had been seeing for the S&P 500 and NASDAQ in terms of it getting above that 200-day line. So now can it hold above that level? A key test now for
and these moving averages below the 200-day moving average all converged right around the 180 level. So the Russell 2000 currently trading around 182. Not much more to go to get to that 180 level. The question is it is it going to hold?
Yes. Okay, and now let's take a look at some individual names. So let's take a look at Fair Isaac, FICO, computer software financial name. A lot of trading action happening around this round number at 600. A little higher, a little lower, but that's roughly the range it's been trading in. Some nice support at the 50-day line as well, and really solid to see it holding so much of this earnings move that it had in November. So relative strength definitely showing in spades here right now, Ken.
Yeah, I think the weekly chart has a very nice look to it in a flat base. You want to see tight, kind of tight, orderly trading. You don't get that all the time, but I think in Fair Isaac's case, it's a pretty good example of a tight flat base here forming near the 10-week moving average. The accumulation distribution rating of C plus. If we go back to the daily chart, you can see most of the gains in recent weeks have come in pretty light volume. You had a good higher volume gain yesterday on that down day for the market, but a lot of below average volume gains recently. Nonetheless, it is still a good setup. You can see the relative strength line is perched near new high ground. The composite rating of 92, helped by pretty decent earnings estimates for fiscal 23 and 24. And, revenue growth, not typically what we'd like to see, but, finding those stocks these days that really measure up fundamentally and technically are super difficult to find. Sometimes the annual earnings estimates are weak. Sometimes the quarterly growth may not be there. So for Fair Isaac, that single digit revenue growth is, we'd like to see that a little bit better, but I think the earnings estimates and the technical picture for this stock make it one worth watching.
Well, I think that's a pretty fair assessment there, Ken. Okay. On Fair Isaac. All right, let's take a look. Couldn't resist. Let's take a look at BWA. This is BorgWarner. We've been looking at a number of stocks in this area, the auto and trucking area, coming off lows today, so down by just 0.4% in today's session. Also a pretty strong relative strength line as of late. So to see it holding around these levels after this strong move off of the 50-day line, pretty interesting here. What do you think?
Yeah, I think it's another interesting chart here. Again, sort of a lukewarm accumulation distribution rating of C plus. However, buying technical breakouts, when you're in a good, healthy bull market, and there are signs that big institutional money is coming in from the sidelines that's fueling an uptrend. A lot of these technical breakouts can really make meaningful, headway. But when we're in this kind of market right now, where we're reminded yesterday that there are sellers still around, breakouts are tough. So if you can look at some of these breakouts that pull back close to proper entry points, that's probably a better way to do it. So BorgWarner has been declining in light volume. The market kind of sold off late. BorgWarner closed off lows and only managed to decline about 0.4%, held on to its strength today. So I think this is just a good example of what a retest of a prior buy area looks like, and this is another chart that looks pretty strong to me.
Yeah, so Ken, if it can trade around these levels a little bit longer and have the 21 day or even the 50-day catch up to it just a little bit, would you say that would be an ideal scenario?
Yeah, I think it's still a risky environment for new buys. So to me, this stock does not look after this 4-day pullback. It's right back to the pivot. So it doesn't look extended to me. Holding above the 10-day moving average, even if it were to pull down to that 21-day line, the green line, still would be a pretty healthy chart. But the fact that the stock rallied off lows today, still showing me that the stock's got good support here. Only what 20, 30 cents above that last pivot
Mm-hmm.
point. So certainly not an extended stock. And if you're looking to put money to work, this one seems to be in a buy zone.
Okay, let's also take a look at VVV to cap off our analysis today. This is Valvoline, and it does, let's see, a little bit better accumulation distribution there, Ken. B plus. If you go back a little further, it does seem like we have quite a few more blue volume spikes in this move off of the October lows than red. So that's good. But where do we consider a buy point here? Also seeing that relative strength blue dot, which is great to see.
Yeah, no, I still this to me looks like a stock that's under accumulation, and to me it looks actionable right now. If you go back to the daily chart here, our markets writer Mike Larkin first brought this stock up to me a little while ago, but there is something new going on here. You know, that N in Can Slim. What is new going on in the business? And Valvoline just sold their global products business to Saudi Aramco for little about 2.5, 2.6 billion. So they can really just be a full-blown auto services oil change provider in the U.S. And when you make a business decision like that, I think that's one reason why you've got your annual earnings really expected to pick up here in fiscal 23 and 24. So they made a business to just get out of their global products business. They sold it. Now they're really a pure play oil change firm. And full disclosure, this is where I get my oil change. I think they do a great job there, and there's still plenty of room to expand their stores. So market seems optimistic about their U.S. expansion, and you got pretty good fundamentals here, good earnings estimates, and still floating around this 34.23 pivot.
Exactly. All right. Well, some interesting stocks to keep tabs on there. Thank you, Ken. And thanks everyone for tuning in. The team will be back tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details. Justin and I will be on Barron's Live coming up at noon Eastern tomorrow, barrons.com/live for the details on that. It's earnings season, so we are going to be going over the nuts and bolts of IBD's earnings option strategies. And then next week, Ken is going to hit us with some ideas, some specific ideas on the earnings option front, because Ken, we're really starting to see earnings season ramp up.
It's going to be very busy next week, but even busier the following week when we hear from Apple. But we got some high profile tech names in the coming week. Microsoft, we've got Boeing reported, a lot of these defense stocks. So pretty busy earnings week coming up. I'm just putting the finishing touches on my earnings preview column, and
Awesome.
plenty to write about. Lots of high profile semiconductor stocks reporting earnings next week. So in terms of earnings options, we'll have plenty to talk about next week.
Great.
Yeah, while Harold's gone.
Can't wait. Yeah, we've been doing a Thursday option video with Harold posted to our YouTube channel and investors.com/videos. So Ken, I'm excited to get you on there because I love your earnings not earnings options. That's in my brain, but your earnings preview column,
Yeah.
because there's some invaluable information there every earnings season, looking at setups, what those trades are, how we can manage our risk around earnings season. So looking forward to that. And thanks again for everyone for tuning in. We'll see you back here tomorrow.